Welcome to our interim results highlights for the 6 months ended 30th of September 2025. The group's performance was excellent. The encouraging trends we saw in the first quarter continued into the second quarter with results that showcase progress on our Bold Vision 2030 ambitions. The period was also characterized by a more stable macroeconomic and currency backdrop, which supported strong rand and hard currency growth. As a purpose-led company, Vodacom is committed to connecting for a better future. Our initiative seeks to empower people, protect the planet, and maintain trust. We believe that inclusion starts with opportunity. Through Code Like a Girl, we've trained almost 23,000 girls. We connected 3 million learners through our e-learning and connectivity platforms, trained teachers, and invest in schools of excellence. Our latest skills-based initiative is called Tech Start and is very ambitious. We aim to upskill 1 million young people by 2027. We actively pursue connectivity in underserviced areas. To this end, we added 1,881 4G sites and 3,524 5G sites across the footprint over the last 6 months. We plan to spend more than 23 billion rand in capital expenditure across our markets this financial year, which will see our reach continue to grow. We want to see people thrive, particularly the most vulnerable in our society. Our M-Mama emergency healthcare program has already saved 6,500 lives. In DRC, we train women with disabilities as M-Pesa agents. In Egypt, we recently launched the Maki program to empower 1 million rural women over the next 3 years. This program was created in association with Egypt's Micro, Small and Medium Enterprises Development Agency, the CARE Egypt Foundation, and Samsung. It is designed to foster digital and financial inclusion by equipping rural women with skills and tools to utilize Vodafone Cash services and engage in digital education. Trust is like Wi-Fi. It's invisible, but you most certainly feel it when it's gone. In addition to our ethics, privacy and procurement programs, we are committed to protecting the planet. Our hero projects are focused on achieving net zero for Scope 1 and 2 greenhouse gas emissions by 2035. In the prior year, 100% of our usage on grid electricity was matched with renewable energy sources, and we continue on this journey to reduce our carbon footprint. Most recently, we partnered with the National Business Initiative in South Africa, mapping strategic technologies to enhance water security and climate adaptation with the use of AI, big data, and IoT. Our Tech for Good solutions play a vital role in us delivering on our purpose pillars and addressing challenges across key sectors, including energy, healthcare, education, and agriculture. In healthcare, we're transforming frontline care. In Egypt and Kenya, we have partnered with the government on national health insurance to digitalize healthcare journeys, providing a blueprint for our other markets. In an ever-changing environment, we remain committed to doing what is right. We have emerged as an ESG leader, and we expect to be even more progressive with our initiatives in the years to come. Our purpose to connect for a better future drives our strategic direction and is embedded in how we operate. Our strategy, called Vision 2030, is founded on this purpose and builds on the achievements of Vision 2025 and our system of advantage. Vision 2030 is designed to accelerate growth, deepen our positive impact across Africa, and deliver sustainable value for our shareholders. In this slide, we set out the how, what, and why of our strategy. Beginning with the why, I've already talked to the power of our purpose. The other crucial element of our why is our customer, which is the reason that we exist. Our focus on customer makes up the first of our 3 strategic initiatives. With our footprint's population projected to reach 650 million by 2030, we have a significant opportunity to expand access, drive innovation, and provide affordable services. As we grow our customer bases, we will deliver an exceptional customer experience focused on simplified propositions and loyalty. Our second imperative is innovating for growth as we diversify our revenue beyond mobile. This imperative answers the what we are going to do over the next 5 years. We aim to achieve market leadership across all forms of connectivity. In fixed, we plan to leverage partnerships and co-builds to scale our ambitions. As we innovate beyond mobile, we are committed to driving inclusion. Smartphone penetration is a priority, unlocking opportunities for digital services and financial inclusion. Our financial services empower millions across Africa to participate in the formal economy by providing accessible, reliable, and innovative digital payment platforms. We expect to meaningfully grow our financial services customer base and deepen our product suite. As we pull together our scale and leadership in connectivity, digital and financial services, we will be an integrated solution provider of choice for our customers. This will power our growth into beyond mobile services. As we expand our talent pipeline, embed GenAI training at scale, and foster an engaged frontline first culture, we will support exceptional customer experience. We are one of Africa's largest tower owners, yet recognize the value of infrastructure sharing and strategic partnerships to expand coverage and enhance efficiencies. We also see opportunities to harness synergies and scale from Vodafone and across our group to achieve operating model efficiencies and optimize assets, services, and capabilities. For each of these ambitions, we have set ambitious 2030 targets. The key outcomes for you, our shareholders, are listed on the right. I'm very pleased to report that we have delivered handsomely on each of these in the first 6 months. In addition to exceeding our double-digit EBITDA target, we also reported a meaningful step up in return on capital employed. This should highlight our focus on enhancing shareholder returns. Our geographic diversification and increased scale were key milestones of Vision 2025. We are leveraging the scale into the next 5 years of our strategy. We now serve 223 million customers across a footprint that includes the DRC, Egypt, Ethiopia, Kenya, Lesotho, Mozambique, South Africa, and Tanzania. Over the last 6 months, we added 12 million customers with commercial momentum that provides clear upside to our Vision 2030 target of 260 million customers. Our geographic diversification has driven a meaningful change in our operating profit mix. In financial year 2020, our markets outside South Africa contributed 29% of operating profit. In the current period, this weighting increased to 58%, reflecting the rapid growth of our markets outside of South Africa. Central to Vision 2030 is digital and financial inclusion. We target 75% smartphone penetration by 2030. Pleasingly, we reported a nice step up to 65% penetration over the last 6 months. This reflects the significant opportunity we still have to connect so many more people to the internet. While using prepaid device financing bundles and low-cost devices to bridge the gap for the remaining 78 million customers on our base without a smartphone. Prepaid handset financing allows a customer to repay the phone daily or as they generate income. Our financial service business is driving financial inclusion across our markets. We are rapidly approaching the 100 million milestone, having reached 94 million customers in the period. Vodacom's ability to connect is underpinned by scale. With over 49,000 sites across the continent, we are one of Africa's largest tower owners. Owning our infrastructure helps us manage costs, but it's also a strategic lever we can use in partnerships to accelerate rural coverage. In addition to our footprint, our growth ambitions are also supported by product adoption. As part of Vision 2030, we intend to grow the contributions of our beyond mobile services to 30% of service revenue. This segment includes fixed, cloud, hosting, security, digital and financial services, and IoT. In the fiber space, we are working on co-investment models to accelerate rollouts across our markets. In South Africa, we are very excited about the long-awaited massive transaction. Given that fiber is a critical enabler of inclusive economic growth, we remain steadfast in our belief that this transaction holds significant public interest and pro-competitive benefits. In financial services, which is the largest component of our beyond mobile, we are growing across our markets with products that cut across consumers and merchants. Vodacom's success in this segment is a function of strategic focus. In the slides to come, I will talk you through our roadmap for financial services, which we believe will see this revenue compound at a healthy rate. Prepaid data makes up 31% of service revenue, almost double the contribution of prepaid voice. We continue to complement the structural growth in data traffic demand with network coverage, increased smartphone penetration, and improved data monetization. This supported excellent growth of 25.6% in the period. Our contract revenue is largely from South Africa and Egypt and contributes 25.6% of service revenue. While all our customers demand a best-in-class experience, this is a non-negotiable focus area for our contract customers. We have managed to apply inflationary price adjustments but with more value for our customers. Our value proposition in contract is further enhanced with loyalty, insurance, device and content offerings. Finally, to prepaid voice. Having contributed 31% of service revenue in financial year 2020, prepaid voice now makes up 16.6% of service revenue. In the period, prepaid voice was broadly flat with growth in DRC, Egypt and Tanzania offsetting pressures in South Africa. We expect prepaid voice to remain an important contributor to the group and we will manage its contribution over the medium term. Pulling together our connectivity, digital and financial services offerings, we partner with businesses to accelerate their growth and with governments to drive efficiencies. We are transforming the ways of working through digital technology in high growth areas like cloud, hosting, managed security, managed services and IoT. This is reflected in the double-digit growth we reported for Vodacom Business in the period. Turning to the group's results. We reported a strong first half highlighting our hard currency earnings potential as we move past recent currency devaluations. Our customers are the foundation of our growth. Pleasingly, we grew customers by 8.6%, increasing our customer base to 223 million customers. This commercial momentum was evident in our revenue, which reached 81.6 billion rand, up 12.1% on a normalized basis. The reported growth was also impressive at double digit of 10.9%. Group service revenue grew 12.2% to 65.8 billion rand. Normalized growth was 13.6%, tracking favorably against our double-digit medium-term target. This result reflected excellent growth from Egypt of 42.3% in local currency, a stable performance in South Africa, and a strong recovery from our international business. Group EBITDA was 30.5 billion rand and increased 14.7% in rands. Egypt delivered healthy operational leverage and generated 53.7% EBITDA growth in rands. Our international business lapped once-offs in the prior year and benefited from improved service revenue growth to deliver 35% growth. On a normalized basis, EBITDA growth was 14.8%, comfortably above our medium-term target. Net profit attributable to equity holders grew 33.1% to 9.1 billion rand in the period. Consistent with the net profit result, our headline earnings per share improved significantly to 467 cents per share, up 32.3%. Our capital expenditure intensity was below our guided range of 13 to 14.5% of revenue, having spent 9.4 billion rand in the period. We will be catching up in the second half of the year and expect to land within our guidance range. Finally, looking at the dividend, the board has declared an interim dividend of 330 cents per share, up 15.8%. This again represents an excellent growth outcome. Vodacom's geographic mix balances growth opportunities and strong cash generation. A look at our customer split shows that we have 4 similarly sized segments. Of our 223 million customers, 79% are outside South Africa. From a revenue perspective, South Africa remains the largest component and grew 1.3%. International revenue of 17.3 billion rand was up 12.6% on a reported basis, supported by excellent growth in data and M-Pesa. Egypt delivered revenue of 19.9 billion rand of revenue, contributing 24.4% to the group. On a reported basis, growth was 39.6%. Safaricom is having another excellent year with revenue up 7% in rands. Turning to operating profit, the group reported 20.2 billion rand for the period, up 25.5% on a reported basis. In South Africa, operating profit declined 11% to 8.8 billion rand, reflecting pressure on EBITDA and a once-off cost. This was more than offset by growth across the rest of the portfolio. Still in South Africa, the long-running Please Call Me matter has been settled by the parties out of court. Both parties are glad that finality has been reached in this regard. Back to the results. Egypt contributed 7.8 billion rand to group operating profit and was up 66.5% on a reported basis. International business operating profit doubled to 2.1 billion rand. The result was supported by strong EBITDA performance and lower losses from the segment's associates and joint ventures, which includes Vodacom's stake in M-Pesa Africa and Safaricom Ethiopia. On a reported basis, Safaricom contributed 2.1 billion rand to group operating profit, increasing 65.3%. Safaricom's result was supported by an excellent performance in Kenya and lower losses in Ethiopia. Shifting to a product lens and looking at the contribution of our Beyond Mobile services to each of our geographic segments. These high-growth services include financial and digital services, IoT, fixed, cloud, and hosting. In South Africa, 18.3% of service revenue is now attributable to Beyond Mobile, up from 17.7% in the prior period. This reflects ongoing good growth in financial services and good growth in fixed, cloud, and hosting services. Egypt's Beyond Mobile contribution is supported by Vodafone Cash, digital and fixed. The contribution of these services continues to increase and reach 17.4% in the period. Across our international business, the contribution of Beyond Mobile was 33.3%, while Safaricom continues to set the benchmark at 48.9%. Under Vision 2030, we intend to scale each of these Beyond Mobile revenue streams into successful businesses. Turning now to more detail on financial services, the key driver of Beyond Mobile. This slide sets out our growth roadmap for financial services under Vision 2030. We already made a meaningful contribution to financial inclusion across our footprint. Once financially included, we provide customers with an ecosystem that deepens their access to financial services with products like international remittances, global payments, bill payments, savings, wealth, lending, and insurance. Tanzania is a prime example of how we've deepened financial inclusion. Today, 38% of our M-Pesa revenue is from peer-to-peer and cash out, whereas 4 years ago, this was 83%. The contribution swing is driven by Tanzania's growth in merchants, loans, and savings products. Looking ahead, the next step of our financial services roadmap is unlocking economic growth through financial services. We want to partner with like-minded companies to create a savings culture for consumers through wealth products and an environment for SMEs to thrive. This is where our super apps play a critical role. They create an open platform where we can integrate our own products with thousands of external service providers. As we execute on this roadmap, we expect to meaningfully scale our financial services customers to 120 million customers. Similarly, we expect to scale financial services revenue. Across our consolidated markets, we target between 15 and 20% compound annual growth to financial year 2030, supporting the group's earnings profile. In this slide, we set out our proof points for our financial services ecosystem. We refer to it as dual-sided, as it caters for both merchants and consumers. Our M-Pesa merchant base increased 29.7% to more than 1.5 million. This growth helps expand our addressable commissions pool beyond peer-to-peer payments and withdrawals into both online and offline commerce. In South Africa, our merchant acquiring business is also growing steadily with over 11,300 merchants. In the consumer space, our super apps are scaling across the group. Our M-Pesa app users are at 8 million, up 53.8%. As our customers are migrating to the apps, we are seeing increased product penetration